Metatrends is an exclusive collaboration with Mark and Mike, brought to you by Middle Market Journal's live shows and interviews.
All right, welcome back, guys. Welcome to Metatrends with Mark and Mike. And we have back for the first time ever on our channel, we have a person returning to discuss what they talked about prior to, because I don't think that we gave them enough time in the previous one. Her name is Tash Salas. So welcome back, Tosh. So let me give some bona fides here. Tosh is an attorney that specializes in helping family offices start up, and then therefore has access to what we were going to call investors. And in my presentation, what I do is I routinely teach CEOs that they have to start thinking like investors, because investors pay the most for businesses, but they don't buy businesses; they buy investments. So what is it about your business that's a business? And what is it about your business that's an investment? And how do we move more towards being what they want us to be in order to create a more attractive business model? And I'm super excited about where she's going with this stuff. And I want to make sure that we help her succeed. So Tosh, why don't you fill us in, like what got you here for the people who didn't see the last podcast? Bring
Yeah.
us up to speed.
Well, obviously, thank you so much, Mark. Mike, it's always a pleasure to be here. And yeah, I'm very excited also to be back here. And I think the reason why I'm back is because the topic that we're discussing is not, it's general. Like we are taking many different fragmented pieces of the market and we're trying to bring together. So that's never an easy conversation or a 1 hour thing that we can just talk about. So I'm excited to be here, but I'm even more excited about bringing this vision to life together, right? It takes a village, and I know that you've been incredibly supportive. So thank you again. And just for everybody out there that didn't have the opportunity to listen to the first interview, I'll give you a quick summary of what's going on. Um, there is a mega trend, which is like the boomers, right? Boomers retiring. There's tens of thousands of boomers retiring every single month. And unfortunately, I don't want to say there's none or there's no one that takes over the business, but we know that that gap needs mechanisms that are today not in place for that transfer of wealth to happen effectively and timely. So we have been discussing around these topics, and we have experts around it: M&A, brokers, attorneys, accountants, and everybody wants to help. Everybody sees the problem. Everybody knows from their own perspective how they can collaborate to do that. But the collaboration itself, it's quite complex. And then we have fragmented perspectives or different perspectives that today they don't really have a bridge, which is the consulting and the business side and the investor side, as you said, Mark. And now, when we're talking about family offices, we can really talk about a few different personas of private capital. So, family offices are one of them, right? But we also have investment bankers, and we have specialized funds, which are still on the smaller side. They're not institutional, but they are certainly looking for those companies. So, how do we make sure, to your point, that we are able to help them find these companies and have them look at them and be like, hey, we want to help? And how do we help those that are not ready yet to give them like a second chance? And that chance would be to have advisors like yourself that we know exactly the perspective of the investment side, and we help them get there. So just
Josh,
start compounding over time.
just to be clear, you mean businesses that boomers are leaving because they are retiring and looking to either sell or offload?
Yes, Mike, that is correct. And I'm going to be very specific. Like the idea of having boomers selling their businesses is not just an idea, right? It's just what's going on. So we can obviously talk about other businesses that are selling, right? But they have a longer period of time to exit successfully, while boomers, they're like, I just won my out, right? But I
Yeah,
won my out with the respect that all the intellectual capital and all the wealth that has been created to pass to somebody else. Otherwise, we're going to lose it.
so uh, if you were to describe as generically as possible what the average boomer business that will be available for investors to buy, and I know that we're a very large country, I understand that, but if you can maybe make it generic, what are the, the length of, what industries are the most popular? How long have they been open? What's their gross net? Again, generic, or average.
Yeah.
I think I can be helpful here. All right. So the first thing is more companies will change hands, Mike, in the next 15 years than ever before in American history. We're talking trillions of dollars, which means the majority of them will actually have to close because the baby boomer is going to keel. All right. So, and then what that is massively devastating to the estate of those people that built these things.
Mhm.
So it depends on the study that you're looking for. Ohio State would argue that the average private middle market company, now this is not small business owner, this is private middle market companies are doing 24 million in revenue currently. They're worth just about 20 million or so. Excuse me, 14 million or so. In the case of Vistage and private equity, this is like, call it the upper middle markets. The average is 65 million in revenue. They're worth 40 million currently. They could be worth 13.5 million if we fix what's wrong with them currently, because most of the businesses have some type of negative affecting them. Then you have a second dynamic, which is actually much more pernicious, but much more subtle. We overparented our kids. So, like, I'll give you an example. The mammalian adolescents require unsupervised play in order to become adults. This is if you're chimpanzees, dolphins, or human beings. When is the last time in your orbit you saw any kids playing unsupervised? So what ends up happening is, let's say you and I are having a beef on a schoolyard, and we're teenagers. When I was a kid, I grew up in kind of a violent environment. Like, I was 6 years old when the first knife was pulled on me. There was twice in my life that, forget Usain Bolt, I was the fastest human being on planet Earth. There just wasn't anybody there with an official stopwatch to say, "Hey, that kid's really fast." Like, I actually went back and Googled it. I Google Earthed it right outside my junior high school in Bayside, Queens, how far I had to run to get away from these guys who were trying to kill me. And I'm not exaggerating. One of them was carrying a 2x4 that had screws in the bottom of it. This was really dangerous stuff. I hit the gas so fast, I don't remember my feet touching the ground, and I ran 400 yards. Like, and until my heart was pumping battery acid. And maybe that's the reason why I had to have heart surgery 2 years ago. But the deal is that the good side is people younger than you, Mike, did not have to deal with the violent environment I did. The downside is, you can call me Susan. I'm literally unoffendable. So, like, I just don't care. And I can negotiate with anybody, which means my generation can lead. So we have a dearth of leadership that, let's say we were having a beef, we're of these modern generations, Gen Z or X, Gen Z or millennials, and we had a beef on the playground, we wouldn't settle it ourselves. We'd have to turn to the authority figure. So that's driving HR crazy. It's a very common thing that's going on. There's two books on the subject. One is called The Anxious Generation. The other one is called The Coddling of the American Mind. The reason why I bring it up, and it sounds like a divergence, but no, it goes right into this confluence. The reason why is because the baby boomers, who the hell are going to sell their kids, the company to? You have a dearth of leadership. So
Mhm.
part of this is, I think, when we come down to, like, the nitty gritty, the application of what this challenge is, we're going to have to deal with some type of leadership development process to get the next generation to be able to lead, to be able to inspire people, to be able to buy out these companies. If, however, so let's say you're a person with less gray hair than me. This is a massive opportunity, massive. You can literally buy out all the people that need to retire as an asset purchase, and then you sell as a stock. You're talking about turning into a billionaire just simply because it's dynamic. The business could literally be buying out these baby boomers. So
Right.
it's a massive opportunity. Here's the challenge that I see, Tosh. The challenge is that it's so fragmented. And I think the reason why is because it does not benefit the M&A advisors and the investment bankers to teach the baby boomers how to maximize their opportunity. Their
Mhm.
Fabergé egg that they built this business,
Mhm.
because they're transactional based. So the third challenge here is M&A advisors are like real estate agents. When does your real estate agent need you to sell? It's immediately. That's where they get the best ROI. So they have the ingredients about how to maximize the valuation of it, but they're not motivated to do so. What we really need is conferences and advisors that are motivated to get them the best deal possible. That's a new type of advisor that we're really pioneering as we speak. And it's really a confluence of the three of our worlds coming together in the right way.
Mhm.
So, but I do have to apologize here. Something happened where I think it was Noah. We had a lot of people over the holidays, and someone I think dropped my electric razor, and it actually scarred my face all over the place because like a nick in it, and it was razor sharp, and I didn't notice that until I was done shaving. So I might look ridiculous, but the deal is that I'm blaming Noah. So unless
You
you tell
look
me
great.
different. Wait,
You look great.
I'm
Or
thinking I
at
look
least
so
not
dumb. You're
worse
gonna
than
start calling
before.
me Mike
I,
Hernandez. So
I don't think anybody would have noticed if you hadn't had said something. But I have a
No.
question. Is there, and this for both of you, but um, I have a friend out of Dallas, and he does and follow me because it's not directly related to what we're discussing, but I'm going to work it in. He does multifamily syndication, basically pulls a bunch of investors' dollars together to purchase multifamily properties, et cetera. And this is not about property, but say Boomer Business X.
right.
Would that, because one thing I find, Mark and I may debate this. I technically qualify as a millennial because I was born in 1982, although I'm on the older end of the millennials, or the youngest of the Xers. It depends on who you ask, but I consider myself millennial. The issue with millennials, to Mark's point, today financially, I'm not talking about overparenting or not because that's always debatable, but with respect to finances, someone like me that's 42 years old, two young children, a wife, a dog, and other expenses, may not have the capital to purchase a boomer business. However, is the possibility, or have you seen it work, that you have these groups that pull together resources like they do in multifamily investments and say, I'm buying Tasha's business because she's retiring and she wants to offload it. And then we get into all the other parts with what Mark said, asset purchase, turning it into, I don't, that's way down the line. But I mean, just the purchasing aspect of it.
So let me first give some color to what Mark said, because he has the right frame, but because most people don't, they need the subtleties of what he's talking about. So first of all, to answer your question, Mike, like what are the industries that most boomers are retiring? What are the most important ones? Or what do you see? Let's not let numbers fool us, right? Because of the number of small businesses that we have, clearly we're going to have more of those businesses showing as, hey, there's more people there retiring. Yeah, because, for example, middle market, it's only 4% of the businesses in the US. However, middle market employs a third,
Hmm.
or 50 million people.
Hmm.
So, numbers can fool people very easily. Now, in terms of industries, obviously, we're going to have less people in the industries that are much harder to operate. For example, manufacturing, right?
Hmm.
We're not going to have the same number of manufacturing firms than accounting firms or bookkeeping firms, right? So, numbers in that sense do not really project or do not give us like a very clear map of, what matters and what doesn't matter. Now, another thing is the the things that we're looking at in businesses, right? The value that they have, and the value that they have as a company and for society, right? So that's why I say, okay, well, clearly it's not the same value of a manufacturing firm than an accounting firm. I'm not trying to diminish the value of an accounting firm. I'm just saying if we are in this, point in history where we are going to lose resources and wealth that has been created over the last 50 years, would you like to preserve, because we have limited resources, if we had to choose, would you like to preserve the accounting firm or the manufacturing firm,
Mm. Yeah.
right? And as a nation, right, we are in this point also in the world where we have to focus in national security,
Hmm.
right? So we need to focus in the industries that will allow us to conserve, preserve that wealth that cannot be easily replicated.
Hmm.
That's intellectual capital, right? And honestly, most companies, most brokers, investment bankers rarely talk about intellectual capital, right? We talk about intellectual property as something that you register with the USPTO, but we don't really talk about intellectual capital like, hey, what are your supply chain channels? What are the deals and contracts that you have with your providers? So in the middle market and the large corporation world, yes, we see more of that. But in the small market segment, we really don't. So let's talk about now the fragmentation that Mark was talking about. There's very different types of fragmentation, right? And all these are problems, right? But let's just first make us aware of the problems, and then we can think about some solutions. So fragmentation obviously comes from not understanding how different the segments of the market are. And I think in the higher level, they do know, and in the lower level, they don't. So somebody that says, as an advisor, that they can help small, like nano businesses, I call them nano businesses because there's firms with, less than 10 people there, nano businesses, small businesses, middle market businesses, and really large corporations. You cannot serve that many masters. You really can't. You can, but then the value that you provide is less. So to the point of the newer kind of advisors, we need to understand that we need to specialize, right? So imagine value just like works like this, right? So the broader you are, the less value you provide. So the more specialized you are, this kind of grows like this, right? So if you are an advisor specialized in, wealth transfer or estate planning, for example, if you know the complexities of the industrials, you're going to be able to provide more value there than if you are, just serving the service firms or the technology industry. The technology industry showed us many years ago with Silicon Valley that the more specialized you are, the more value you can create because you are advocating for an ecosystem, right? And we did not take that blueprint. We just decided to keep operating in everything else except tech, right? So that's one part of the fragmentation. The other one is, small, medium, large, etc. And another thing that I just want to say about the trends, right? To your point, Mike, in terms of the syndicators. Mhm. Syndicators are typically for real estate. Mhm. But how do someone like you or Noah, right, can acquire a business? There's this new trend, and there's different names for it. And, the trend has the nature of being misunderstood. But there's the ETA, which is entrepreneurship through acquisition, and search funds. Okay. Neither of these ones is new, but, we love labeling things. Now, those trends are important because there are a new structure for younger entrepreneurs or for newer entrepreneurs because they come maybe from a corporate background and now they want to become entrepreneurs, to rather than build from scratch, buy, acquire something existing and improve it or maintain it. Mhm. Now, entrepreneurship through acquisition, there's already an ecosystem around it. So there are banks lending, there are like alternative lenders as well, and then the search funds themselves, they function as an alternative. So now there are investors, bless you, now there are investors investing in search funds. Now, what is a search fund? It's basically a pool of money. You can call it syndicator. It's a pool of money to acquire one business only, right? Now, the trend of the search funds comes from very elite, and I'm going to put it between quotes, right? Like elite people from Stanford University, Harvard, who were like, oh yeah, this looks cool, and we always need alternative sources of financing. So let's name them search funds, although all funds search, but they decided to just name it the search fund, right? So alternative sources of capital exist, and the financing sources are adapting, right? The problem, and this goes back to the fragmentation, is that everything is fragmented. So unless you know where to search, you can't find it. You cannot find what you don't know that you're looking for, right? So information awareness is critical, but also the second stage of that is to bring them together. All these like fragmented advisors and financiers and entrepreneurs, if we can bring them together with a purpose, with a narrative, then I think that's where we're trying to figure out, right? That's the whole point.
It's funny that you bring that up. I was actually sitting next to my Andrew Garbarino. He's the sitting congressman from my neck of the woods on a flight to BWI. He was on his way to do a vote in DC, and I was on my way to do a series of lectures in Raleigh. And he kind of made the mistake of asking me what I do for a living. And then he spent the rest of the flight asking me about some of the things he has to deal with on a political basis. Kind of a different podcast, but it's around displaced religiosity. But we actually went down the rabbit hole of something that he recognizes as a result of Sarbanes-Oxley. So when I first got started on Wall Street, we had stocks that were going up 3,000% a year. You had the ability to have micro caps. These would have been companies, Mike, that were so teeny tiny, but the rules and regs to go public in 1989 were so different than 2002 that the majority of companies that went public in the 90s rue the day they ever did, because it's so prohibitively expensive to be Sarbanes compliant. So what that means is we lost a whole category of funding for high flying stocks. At the same time, you saw a loss of the second, third, and fourth tier of investment banking during that time period because it didn't warrant going public. At the same time, you saw the investment bankers shrink. You saw private equity skyrocket. So I think they just went and turned into private equity. So they turned straight to the investors, said, give us money. What we're going to do is we're going to buy companies with that. So we have a category of underfunded companies that are starving for funds. And I know it because I sit on the board of a software for healthcare company. And it's like they're walking around with a tin cup going like, do you want to invest? 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 So what he recognized is that the government actually has to do something. I believe he sits on a committee that's actually looking into this, but I don't hold out high hopes that governments are able to do what private business can do. So part of this is we have a national security issue that when you lose manufacturing, you don't have the ability to protect yourself as a country. COVID's a perfect example. The majority of all the stuff we needed in the supply chain to defeat COVID was made in China. So like the virus. So the deal is like you shut down the supply chain and now we leave ourselves vulnerable. I think what we're going to see is as a result of COVID, a lot of nearshoring. We're going to see companies manufacturing come back to Canada, come back to the United States, and probably Mexico. And the reason why is Mexico it would be less expensive to manufacture there because less regulations and cheaper labor, that type of thing. They'd be able to do a much better job manufacturing at the lower levels of manufacturing, not necessarily the higher levels of intellectual capital, but the lower levels. So he sees this as a challenge, and I agree with him. So one of the things that we could do is find those investors and marry them together. So what I see is our world, Mike, marrying Tash's world. So Tash has the investors, we have the investments. Because in the case, let's just use Visage as an example. They have 45,000 members. I would argue 30,000 of them or so are unique companies because sometimes you'll have the CEO and the COO as members of the same company. I'm talking about those companies. Then what I've done is I've been able to trip over some in my travels, some what would you call it? Arguments to the academics around this. The majority of companies on the coasts are built to be sold. 90% want to sell. The central states, that numbers flip. It's not quite 90%, 65% want to pass on to the next generation, but that's fraught with all sorts of challenges. So I want to outline a case study I'm working on right now. This is a new coaching client I picked up. So this is an actual person. She's 70 years old. She's the financial mind of the relationship. The husband is the head of sales. They own a logistics company that happens to have a technology arm, but they're doing things wrong. Like, Mike, have you ever been in the office of someone that like The place was freeze dried in 1985.
Yep, we have
Yep.
those.
Yeah, yeah. So picture like so it kind of needs a rebranding. But what I'm learning about rebranding from my marketing guys is that rebranding starts with a philosophical change at the company. What they are not is a logistics company with a technology arm. Because right now they're doing 65 million in revenue. They're worth 12.8 million. If we fix what's wrong with them, they could be worth 20. So, but if we flip the philosophy there, that they're actually a technology company that happens to be in logistics, and then we switch from a project based technology sales process to subscription, they jump to 130 million in valuation. Now, this gets a little complicated, but I think it's germane to this conversation, especially where I'm going to bring it back to where maybe you come in, Tash. So, picture they want to pass this on to the next generation. They never want to retire. Okay, it's perfectly within their rights to do so. They're out of Chicago, so it's the central states type things that happen there. I said, no problem. They said, well, but we're worried that our daughter might not be able to take over. I said, okay, that's an easy enough solution. Like I've introduced you, Tash, to these two brothers. There's two brothers that I'm connected to that have run 71 companies between the two of them. 11 of which are publicly traded. These guys have been there and done that. They never want to deal with a publicly traded company ever again because it's like selling your soul, right? So what they want to do is they want to coach the next generation to take over. So we're going to shore her up with a private advisory board. So they're going to raise the sophistication there, hopefully getting them to investment grade. So because there is a Pareto distribution that exists in Vistage, 80% will not qualify for due diligence as they currently sit. Of the 20 that will, 80% of them are not investment grade. So what I'm looking forward to doing is data mining what creates investment grade and then give that to all the rungs on the ladder below, increasing the likelihood that more will pass due diligence and will be investment grade. So what we're doing is we're shoring up these organizations so the employees stay employed, right? And to your earlier point, they employ 1/3 of all the employees in the nation. Now, in their case, this husband and wife team, they don't want to sell. And I said, well, could we do something? So this is really a question for you, Tash. They don't want to sell out. They don't want to not run the thing. And they have a daughter who can take over. So we're good with leadership, let's just say, assuming I'm reading the tea leaves correctly. What I'm
Mhm.
thinking we could do is attract outside investments that are not interested in changing the leadership, that want to foster it and then share in the growth. Now what happens is we get to ring the cash register for them off of hundreds of millions of dollars. Because one of the things I didn't mention so far that frankly I'm quite proud of is that what she doesn't realize is logistics is a leading indicator to the economy. So if we can prove in her data set that she has empirical research and then over one 12-month time period, be able to track the correlation of the forecasting of the stock market from her data set, we prove that we could sell it to Wall Street for billions. This is all from a $12.8 million company. That's really exciting stuff. Then what we do is bring in outside investors to ring the cash registers on a couple of hundreds of millions of dollars that we just manufactured between these efforts. And now we turn her into a philanthropist. So we create a foundation and she helps us leave the world a better place without retiring.
Mhm.
That's what I'm seeing is where we can go with all of this. Very excited about it. Do you think I'm wrong with that assessment?
I don't think you're wrong. I think that's part of what we are talking about, like this new advisory mindset. Because the one of the biggest problems, not the biggest problem, but one of the biggest problems is how do we make sure that all the stakeholders get the benefit? Because if you cannot align that, it's just not going to happen, right? I always, refer back to learn the rules, play the rules. There's no other way, right? Play the rules and then try to break the rules in
That's
that
cool.
order. In
Can,
that order.
can I add one thing in there?
Sure.
While not looking for logic and reason in a place that doesn't exist.
Exactly. Like when you're learning and playing the rules, you are just learning and playing the rules. You can on the side, you can look at all the areas of opportunity because that's when you're going to try to break the rules. But if you try to break the rules from the beginning, or question them like, well, everybody wants this. Like, why are you not on board with it? Because I don't get compensated, right? So a lot of the problems, specifically with the real estate industry, and I know we're not there, but it's a clear example that everybody can easily understand. You need to have an association representing brokers, because the truth is that it's really hard to sell a home because of all the administrative stuff that you have to go through. Most families will not do that process over 2 or 3 times in their life, right? Like they do it once, maybe twice, and that's like great. So you do need these brokers that are building an ecosystem, are consistently nurturing it. So they do have a role there. But the fact that people want to break the rules because for them it doesn't make sense to have an intermediary, it's because they've always had the intermediary. So they don't know really how it looks like. And it wouldn't look nice if you had to sell your own home. I'll give you the best example in the world. Elon Musk. A few years ago, I think maybe 4 years ago, he said that he was going to sell all his properties. And he had different properties in California, some of them in SoCal, and I think one bigger one in Bay Area. Okay. And when I saw that, I was like, obviously, like the only bro that can sell his properties without a realtor is Elon Musk, because who has better branding than Elon, right? Who has more reach than Elon? I think that's why he bought Twitter, because he realized he doesn't. The brokers won. So, but I'll share the story quickly. So in SoCal, he was able to sell, I think, 2 or 3 of his properties. I think two. No problem, everything just like from, mouth to mouth. And then for many months, the one in the Bay Area didn't sell and didn't sell and didn't sell and didn't sell. And they had to actually hire a broker in the Bay Area. Not even Elon Musk could sell that property. And when you look at the brokers that he hired, and I talked to them because I did real estate in the Bay Area for a while, they're like super high end. And basically, what they do is that they're going to tell you for how much you can sell your property, because they already have the people that want to buy it for that price,
Hmm.
because it's reasonable, right? Like, not even being Elon Musk, you can overprice your house. That's how crazy the markets are in the United States, right? So in businesses, I mean, unless you're Elon Musk and you can raise $44 billion for a totally overpriced app, you cannot like, you really need to adjust to the market, and you need experts, to your point, with a new perspective that can help these companies. It doesn't matter who they are, right? You need the advisors, and you need more seasoned advisors. So while my perspective, my point of view is great, I could not do it, Mark, without your help, right? Like, I know I cannot, as a millennial. I know that somebody told me the other day, like, Tash, you should become an investment banker. I'm like, yeah, I probably should. But here's the thing, I don't have time to gain that knowledge, expertise, and network before all the boomers are gone. So my best bet is to go with people that have been there, done that, tell them what I'm doing, and have them really build it with me. Otherwise, we're gonna lose all these benefits. So your case, I love it. I think you shared with me before, because it has the sophistication of the financial perspective. Assuming that there is leadership there, you're also going to nurture leadership. But let's assume that there's none for 1 second, because there's more businesses that they don't have one, that those that they do. But then you're giving them strategies for growth, right? That's why I like working with family offices, because family offices are very successful business owners. They wouldn't have that kind of money if it wasn't because they were successful in business. Most family offices made their fortune not in real estate. Millionaires did their fortune in real estate, billionaires in private equity. So they're sophisticated instructors, and they're sophisticated in operations, right? So that's why I really like the thesis that we're discussing, or the hypothesis that we're bringing to the market, Mark, because we need to pair that expertise of investors. We don't need more private equity firms that just will, run down a business. We need those that want to preserve it, and we need those that want to preserve it. But I don't see it as a sale of a business. I also think that with family offices, there's more flexibility in this structure. So maybe a minority equity stake, right? And you help them grow. And then you take them to the next stage. So there's just like a lot of things that we can definitely discuss. But what you're doing is because you have the incentives to help the companies that way. Now we need to find the incentives to get them with the investor, right? And do it at scale. It has to happen quickly. So I'm in conversations with investment bankers. I think, as to your point, they are intermediaries, and whether they add value or not, they are intermediaries. They are there. So learn the rules, play the rules, and then we can try to break the rules. But now we have to play the rules and do it at scale to identify, hey, what are we missing? And can we convince them to play a different game? Can they become this type of advisors? Can we generate the incentives? Can we generate the agreements, the framework to work like that? I think we can. And I don't think it's that complicated. It sounds complicated, but I think there's a lot of people out there. They're like, yeah, we know where the market is going, and either we collaborate or we'll just be part of the rest of the people. Red ocean, blue ocean, red ocean, blue ocean.
Well, I think there might be a subtle thing in between there too, because what happens is like I think what I've found is investment bankers are deal junkies. Like as soon as they catch wind of me, they are on me. It's like this is gonna sound weird. Dudes will never know what it's like to be a 19-year-old girl. We just won't. Doesn't matter how much money we make or how good looking we are, or whether we drink protein shakes or work out or whatever. We're never going to be as sexy as a 19-year-old girl. Men don't have in the mating market an attractive business model. We have to earn everything. What we bring to the table is not just us. We bring to the table what have we done so far. We have to bring resources, and frankly, rightly so, because women are significantly more important to the species than men are by a wide margin. Again, another topic for a different day. But this is the weird part. The closest thing I can tell you, because you're going to understand this much better than me, Tash, just simply because you're a woman. I kind of know what it's like to be the hottest woman at the bar or the party, because as soon as investment bankers, as soon as advisors, that I trip over. Well, get this, I trip over an advisor in every other presentation I give for Vistage. So this year, I'm going to trip over somewhere between 25 and 50 advisors. So I did last year, because I did 99 last year. So the idea though is as soon as they hear how many CEOs I speak to and how many I have in my database, they are on me like white on rice. And then, but
Mhm.
here's the
That's probably the only time you'll be the sexiest person at a bar.
oh, like I resemble that remark. All right, so the deal is the when they're like that, it kind of puts me in a position to be like Don Corleone in their world. What I'll tell them is like, say, okay, here's how it's going to go. I'm going to give you a referral. If you go dark on me, that's the last one. If you have egg on your face, that's the last one. If you put egg on the client's face, that's the last one. So the client is actually carrying my weight with them, and the advisor is not trying to dazzle them; they're trying to dazzle me through them. That's like an added benefit of being a Vistage member, right? So the same thing happens with Vistage. Like I'm not there to impress the members. I'm there to impress the chair. I want the chair to talk nice about me on the intranet, they call ChairNet, so to talk to all the other chairs, so that this way they keep booking me so I can keep doing this type of good work, right? So, and they're also great places to bounce ideas off of. So the dilemma that I've found with investment bankers is they are hot and heavy in the beginning. They are lovey-dovey, ready to smooch me up and all this type of stuff until they get the first deal, and then they go dark. There's another category in there called growth services. This is one where I've already introduced you to a couple of people in that universe. What they are is they want to come in the latter stages prior to a deal to improve the curb appeal of the deal. Then they're hoping that the business owner will keep them on to handle their deal. That's their kind of kitsch about this. I think there's another advisor in there. And I don't know that it's actually comes from your world. I think it comes from mine. What I'm
Mhm.
thinking is fiduciary wealth managers. We can teach this to them. So this way they can teach this to their clientele. And that can be the precursor of who comes to your conference. And then what we need is some type of mechanism, I would argue, is an academy. So I don't know what we call it, but the deal is it's like a extreme valuation academy or something like that, where what we're doing is we're teaching them in every single industry. Now this is really the hard part, Mike. and this is where I think you're going to come in involved in all of this, is it's like peeling an onion. Okay, so I've seen firsthand dozens of these go through, but that's only a small portion of that universe. What we really have to do is analyze what creates extreme valuation in every business model within this orbit, and then be able to kind of create a curriculum, because it's one of the things I would argue that Vistage is missing. It's more self-directed, and frankly, I don't know how many times you guys have had conversations with CEOs, but they can tend to be a little diluted. It's almost like when your signature is on the front of someone else's paycheck, those people can no longer tell you the truth. Like,
Hmm.
yes, your breath does smell. Yes, oh, yes, that joke is not funny. Like they can tell you what the back of your head looks like. So you have to be willing. Like you taught me this. They have to be willing to invest in advisory work. Otherwise, the investors don't come because the investors don't want to fix the company. They don't want to actually go in this. There's two different types of investors. So if I got it right, the conference that you're building, let's call it the US Economic Forum, will not have advisors in that room. It will only be investment grade companies and investors. Now, let me just build this a little bit here, because Mike, have you ever been to an M&A conference?
No, I've worked for M&A firms as an advisor.
Okay, so here's the deal. This is just my opinion. M&A conferences suck, and the reason why is because they're filled with M&A advisors. So if you walk in that room and you're not an M&A advisor, that's like being the hottest girl at Mardi Gras on Fat Tuesday. Like Viking stuff is happening around you. So what we really need to do is kind of keep the advisors out of the way so we can actually have people who are motivated for deals happen to have those conversations where it's not rushing to market and trying to secure things for advisors. They already have the relationship, they're just not allowed in the room. But
Hmm.
what we have to do is make sure the investors are qualified, because there's a dirty little secret in if I'm reading the tea leaves correctly, there's a dirty little secret for people that seek deals, the deal searchers you were talking about before. They're required to listen to as many deals as possible for that month, which means they waste people's time all the freaking time. So, like, I know people who deal with this, and it's really frustrating for them. Yeah, they'll take the call, but they have no intention of investing. They take the call because it just checks the box that they took the call, and that's frustrating. So what we really want to do is take the knowledge base that exists in silos across the United States. And I understand why the advisors don't want to share their information, but they got to share it with me if they want my referrals. They got to share it with us if they want in this world. So what you have is this information in silos. That we want to do is democratize that information. We want to
Hmm.
make it so that the person who's actually running the company is doing it the right way, because it's like building a plane while you're flying it. Are you building it
Hmm.
right? And then, okay, who are you to be the judge of whether it's built right or not? Is that audited by an interested third party? So that's what I'm thinking an academy can become. So we're actually going to interview Louis Schiff. He runs Birthing Giants. We're going to do him next week, and he has that. I don't know if it's 100% of what we're looking for. My nagging suspicion is it's half of what we're looking for, maybe a little better than that. And then what we have to do is bring in people that understand how to double the top line revenue while tripling the bottom line revenue, and then what actually is required to make that company as attractive as possible so they can do this. This is what I want for every one of my clients. I want them to be able to, like a super attractive woman, they sit back with their arms folded going, dazzle me. Why should I choose you? So you want as many people coming to the table as much as possible, and then pick the best one for you. And then it comes down to a simple conversation that I think it makes sense for us to have right now. I got this weird call, Mike, early on in my speaking career. The chair in Raleigh at the time called me up and said, "Hey, listen, can you coach one of my members?" That's never happened before, never happened since. Okay, so why do you want me to coach your member? You're a coach. I think what that really translates to, can you fix my member? So I called the guy up, and now the guy was doing really nice things for me on ChairNet and trying to get me booked across the United States. So I said, okay, I'll call the guy. So I called the guy, I listened to him, and he has visceral hatred for the private equity that bought his company. A laundry list of complaints, longer than I am tall. So I said, okay, tell me the deal. He said, well, so he tells me the whole deal, and he said, and they fired me from my own board. Like, I've coached 27,000 CEOs so far, all in. How many times do you think I've ever heard someone I got fired from my own board? This is the guy. So I said to him, okay, there's a story behind that. Tell me what the story is. He tells me the story. I said, okay, I'm going to tell you what I've heard. Tell me if this sounds sane to you. Someone wrote you a check for $36 million and you hate them for it. And the guy goes, yeah. And that's like hating the lottery because you won the lottery. Like, all right. It's because no one treated this guy like a human being. And no one sat him down and said, well, what do you want to be when you grow up? Because his answer would have been the CEO of this company. So he should have never sold it. Right. So part of it is like, how can we actually analyze something from what's an ideal outcome for that person and then reverse engineering, given the fact that this is the greatest opportunity for people to buy companies, not sell them. So given the fact that the market actually collapses every once in a while, so that this way you have to sit back and be patient with this whole thing. And maybe you didn't build the company the right way. So how do we remedially coach them, get them to actually get the company in the right place, regardless if they think that's logic or reasonable? So we're cracking the code on what creates extreme valuation and what I think is going to be an academy to do exactly that. All right,
Hmm.
but here's the challenge I have for you, Tash. You have a very aggressive expectation about when you're going to be able to launch this thing. If I understand it correctly, you're talking October of this year of 2025. And I'm thinking that might be a little too optimistic. Normally I am an optimist. So I don't want to like rain fire down on your expectations, but I'm like, how are we going to get that done in such a quick time period? I know it's needed, but the deal is we also want to make this as successful as possible.
Yeah. Well, there's a few things. So for example, in terms of the resources that we need to achieve this, right? And what you bring to the table, and I'm going to just say it out loud so people understand, the proprietary networks that you have, that you belong to access CEOs, okay? Because that's the reason why you're so valuable in this world for investors, because you have the companies, you have proprietary access to them.
Hmm.
Okay, investment bankers don't, right? But we need to play one role, which is the investment banker. Okay, while we build the academy and everything else, we need to have this whole vision, but know that we will need to execute stage by stage. And the first stage might not necessarily be the academy as the academy itself. We already have you, and you are the academy right now. Let's just say it that way. Okay.
Thank you for that.
I go with an investment banking firm. They look at 1,500 deals every year and they take 30. Waste. Every industry has waste,
Mm.
right? So what happens with the other, 1,470 companies that they look at? Because they already invested resources in at least reviewing them, right? In getting them. So they've already invested a lot of things to get to 1,500 leads. They look at them and they say, okay, I'm just going to take 30. Okay. So could we have a partnership with a firm like that? And can we say, can we give the other ones a second chance? And what that second chance looks like? That second chance looks like this. It looks like some of them are in that 15% that we always talk about, right? So if the numbers of Vistage sounds good, we can say that this investment banking firm takes around maybe 2 to 5%, because those are usually the investment graded companies. Then there's the other 80%, as you said, the Pareto, the other 80% of the companies that are far, far away from being ready for investment. But then there's that other 15% within that 1,500 leads that they have, that those are the ones that deserve a second chance. So could we partner up with this investment banking firm and say, we'll take your waste, right? Because it's waste at the end of the day,
Yep.
and put them within our advisory board, and you build the academy as you go, right? But now you have a ton of companies that deserve a second chance, that could hire us. And now the benefit for the investment banking firm, because it's like, okay, at this point I don't care about them anymore. Well, what if in 3 years, many of these companies are ready for your specific criteria? And because they're investment bankers, they hold these companies and they can share it with other investment bankers. So they would still profit eventually from, spreading them around. So I do think the USA Economic Forum timeframe is very ambitious, depending on how we do it. If we think that we're going to do everything and have every single aspect ready for then, no. But if we say, Mark, you are the academy, assume yourself as the academy and steward of the advisor roles. Okay. So that's, and you are that person, or you are the academy, right? Me, I am the person who's dealing with these investment banking firms, with these private capital, right? Investment banking, family offices, name it, whatever you want. And I go to them and I say, hey, we're going to have deals. Now, initially, we are not going to have more deals than what the investment banking firm already does. We won't. But we need them to understand the problem that we're facing and want to collaborate with us. The problem that we're facing, and this is how we started the conversation, is either we help them or we lose them. So which way we're going to go, right? Now, this investment banking firm that I have in my head right now, they have philanthropic processes where they help veterans. Now, let me ask you for 1 second. People like Noah, young guys coming out of the Navy, you know, aren't they vets? Aren't they hungry? Don't they want these businesses, right? So if we can identify businesses that do not have necessarily the second generation wanting to take over, can we train? And this is a different academy. Can we train? Can we support? Can we create an apprenticeship program for veterans that want to take over these businesses because they're hungry? But I've talked to many of these guys and they're like, yeah, like you tell me what to do. Exactly. The problem with a business is that nobody's going to tell you what to do, right?
Yeah.
Well, these guys are like, yeah, I want this offering. I'll do everything. I'll just tell me, which is the profile that we are not talking about when it comes to millennials, right? Like we don't want suffering. We want everything easy. And these guys don't. They are like, give it to me, but tell me what to do. And so we need to tell them what a business looks like and help them with an advisory board that, can guide them through. So the pieces are there, right? I
Yeah.
do think it's ambitious. I think it's a matter of reaching out to the giants. If we try to do it ourselves or we go with smaller firms, the US Economic Forum is never going to happen, but it's urgent. So I'm going to keep reaching out to the biggest investors, to the biggest investment bankers I know, because I want to hang myself from their success and bring our vision to them as fast as possible. And if I don't succeed, and I strongly believe this, if I don't succeed in the first time, we're going to need to redefine the metric of success, because just trying, it is successful. We're going to have to make people realize that just trying to do this is a success story, because in 1 year, like, are you expecting a miracle, or everybody's expecting a miracle? I think we need to build it.
Well, there's a thing. There's a thing I'm tapping into in my presentations, and Mike, maybe you're doing the same. Is I'm noticing that when people are really intrigued when you're pioneering something, especially
Hmm.
something that you're pioneering that could possibly help them positively.
Hmm.
They're more intrigued in it than if you've already succeeded at it. So enrolling the CEOs is a cakewalk.
Hmm.
So it's kind of like, how do we maximize our opportunities as speakers, Mike? So that this way we can educate this and then create like a whole new like university around this that we can help people. Because like even when you bring up veterans, it's been my experience that what veterans go through is a depression when they first come out. A little like astronauts talk about this after they went to the moon. They experience depression for about a month and a half after returning from the moon. And the reason
Hmm.
why is because they'll never do something as important like that ever again. So there's kind of like, how do we recreate purpose for them so that they can lead? And then how do you take the lessons the life lessons they learned in the military and then reapply those to how they would work in business? So
Hmm.
yeah, this is really exciting stuff. Super cool. I like your attitude about it. So I don't disagree with what you're talking about. There's a host of other referrals I want to give you now. And then what that does, it kind of opens my mind to like, who am I talking to and who makes more sense for this or that or the other thing. So I think what we're going to have to do is more of these type of things, these type of conversations, because the laundry list of people that I think could help us make this become reality is deeper after talking to you about this. And it's something I got to tell you, in our conversations over the last year or two, I've walked away from with some little nugget of information each time I've talked to you, Tash. So it's like you're doing really good work. I want you to keep this up. It's awesome.
We're going to keep it up.
Yeah,
And as I said before, it takes a village. So this is just a vision. Visionaries are visionaries. We don't have a choice, really. Trust me, it's not easy and it's not fun. But that's just who we are. And it just takes everybody else great at what they're doing to believe that that is possible and to believe that they can be part of it. And yeah, let's do it, you know. But one thing that I do want to say is everybody in here needs to think bigger. Whatever you're thinking, I can tell you right now, you're not thinking big enough, because in order to make something this happen, you cannot start small. You think big, and then you go with the guy who already has the perfect infrastructure, and you convince him to let us do it
well,
with that.
there's one little pushback I would give you on this call, and what it is that I don't see me as the linchpin in this. I see the world, your world, coming together with my world as a linchpin in this. So because
It is.
you've added a lot of value to my thought process just in the short conversations we've had so far.
Yeah,
So
no, really looking forward to these academies, because again, you're the only one who can come up with this entire training process for the advisors and for the entrepreneurs, you know, for the leadership, for the second leadership, for the takeover, right? I can go and find these companies that have waste, because the waste is where we want to work. We don't want to be the, oh, I'm going to bring you leads, I'm going to bring you companies, because the person that's getting 1,500 companies per year is going to say, oh, thank you, Mark, right? But they don't really need that. They need something else. And we are going to figure out what that is. So we are not just takers, but we can also give.
well, I'm thinking what's obvious to me is so they go through our system, join the association, and then now they're more likely to be investment grade. And then that's what would tip the boss. So if we take,
Second
I
chance.
don't think investment bankers want to be in the education business. They just don't. They want to be in the transaction business, but they have knowledge that we could tap. What we want to do is take the ones that don't qualify. Again, back to the Pareto distributions, 80% won't. How do we get them more likely to? Then the 20% that do, 80% of them don't qualify as investment grade. So how do we take the lessons of the investment grade, teach it to them so they're more investment grade? Now we bring those back to the investment bankers, and now like, oh, hallelujah. So now this is hunting ducks in a barrel. So
That is exactly how I see it. You know, we are going to present that, but again, don't think it's impossible. Think, what do we need to make it possible?
yeah, well, you're barking up the right tree with me. I'm a big thinker, and I like
You
typically
know,
what happens is the one I would argue legit complaint in my presentations is that it's so big picture that people don't know the application of it. So I have to spend time focusing on their attention on this is the application, this is the application, that type of thing. My issue is usually the opposite of what you're arguing. But I think this is actually a good place to stop for this meeting. I
yeah,
think we hit the nail on the head with all of this, and there's a host of other people like I want to bring to the table to kind of test them out in this environment to see how they actually can add value to the world we're building, Mike. And then what we do is then we can utilize them to help build the world we're building, Tosh. So I think
mm,
this is like a cool confluence of it. In fact, what I think it really is I'm noticing that the members are asking me tougher and tougher questions that require rarer and rarer people to answer those rare questions. And there's a confluence happening around the work we're talking about on this call.
mhm.
So I'm proud to be a part of it. So thank you so much for your time, Tash. I really do appreciate it. And we're going to
And
do
not
more of
just-
these. All right.
yeah, my pleasure. As
Looking
always.
forward to kicking so much ass our feet are going to hurt. Right.
Let's
Is,
go.
is there anything else we need to say, Mike? in order to be
No,
complete?
given my background being in communications, I'm learning as if I'm in a, I don't want to use a certain university. Let's just say an Ivy League course for executives when it comes to finances and businesses. So I think it's very helpful. I did use that example of real estate syndication just because it's something that I've been involved with. But really, I'm hearing it a lot, and I have a pretty large network, and no, they're not all comms people like me. They're in every single industry, and they are very much interested in what it is that they can do to either purchase businesses of folks that are moving away. It doesn't always have to be a specific kind of business. The trends have been online. Does your business have the ability to operate from a converted garage like where I am in my house? So there are, I think there are opportunities, especially with older millennials, more so than Gen Z. I think they're going to got of age or whatever, but many of them are still in their early to mid 20s. It's a little different, but that is, I feel from my perspective, it's a big possibility.
If I may, I like to just combine what Mark said, what I'm saying, and what Mike is saying. Here's what we need from the communication, education, and marketing perspective. Mhm. A podcast setup is fantastic, but it's not institutional, which means that people don't know when they come here, right? Whenever you start creating something that it's new, you need consistency and to condition people knowing when they can come back. Now, you, Mark, have, a lot of board or advisors around you, mhm, that they also need marketing outside of Vistage, even, right? They need marketing. Now, Mike, you're an expert in communication, right? And you're like trying to bridge these different worlds. And I am one of these rare people that Mark is talking about when it comes to new questions about, these companies. So I was, within the middle market, I started thinking about this program, okay, which is really a podcast, okay, but a program that we have maybe once a week or twice a week, always in the same time zone. That requires discipline, which is the hardest part, right? But we can bring a lot of boards. We can just send anyway, the how it's not important, but what it's really relevant is that we can bring boards to talk a case of their clients every now and we have these intense conversations. People can join live or they can listen later, right? If we become disciplined in something like this and we brand it, it's a new world because we cannot keep having these conversations just the four of us. We can't. It's not reasonable. We need to get more people involved. Now, how you get them involved is very important. You need to add value to them. Everybody's looking for attention. Everybody's looking for marketing. Everybody's looking to share with the world their views, their perspective. How do they do that? In a podcast. But that's it. So let's create a platform for these people. You have everybody in the world, Mark, that could come here, right? So they don't have to come every week. They can come once a month. They can come once a year. There's so many in Vistage that you'll never have a shortage of people that want to come, right? Mike organize it, and then we have other people like myself that are adding value from different perspectives to the companies. So that's just one thought. I love this space. I think it's amazing, Mark, what you're doing. I think bigger.
I think we're kind of part of the Mutual Admiration Society, and frankly, I've got a nagging suspicion because, Mike, technically, Tosh and I have never met, right? We only ever communicated on this, right? But I got a nagging suspicion she's probably about this big, little teeny tiny thing, right? And then,
Yes.
but she thinks really big. So it's like how to think big regardless of your station in life. Right.
Yeah,
So
like size
that's
doesn't
where I'm
matter.
seeing all this go, but I'm super excited about it. Thanks so much for your time. Thanks for sharing this with our audience. I think that's exactly what we can build is an academy around this and be able to take that Pareto distribution and move that number north, creating a massive wealth. One of the things I say to my members that listen to me is I'm in the business of making people incredibly wealthy. I make them so wealthy that they end up having tax challenges that I have to help solve them for by finding them a charity that they like better than the federal government. And we have a 100% track record on that one.